Alright guys, welcome back to another video on the channel, and today we are going over a few things such as understanding your model, because I think personally so many people have overcomplicated ICT, bringing out different models, different concepts, and there's people bringing out new words of the same thing which already exists, so it's just overcomplicating it for no reason. And the one thing that we're going to go over today is the three specific models that I personally trade, and we're going to find the model which suits you and which is right for you, because everyone can trade different models and still be profitable. It depends which model works for you best. And for me personally, I trade all of these models myself. It depends on the scenario and the type of price action we are seeing throughout the course of that trading day. Maybe I'm going to look for this model, or price has done this, this, and this. I'm gonna take advantage of this model. So we're gonna go all over that, and also including a few other things inside this video. Guys, we're also going to backtest each one of these models. So I'm gonna show you one example of each model that we trade on a day-to-day basis. So let's get into the first slide. Okay, so finding the model that works for you, a model that you can apply to make real money. Because guys, what do we actually care about? We care about making money. This is why I make these videos for you guys, breaking down ICT so you don't have to listen to the 2022 mentorship. Because when I personally studied the 2022, I was overwhelmed with all of the information and the waffle and the irrelevant chat which ICT goes on rant after rant after rant, and then he finally dropped possibly one thing that you need to know out of a whole 40-minute video. So that's why I go straight to the point inside of my videos. And guys, you can watch the whole of the 2022 and you're only going to get 0.1 here. You're not going to get 0.3, 0.2, or even the combination of all the models combined, because you can trade the I for value gap model or the continuation model, but all the I for value gap model is a continuation. So these are the three main models that I personally trade, and they can actually be combined together in certain scenarios. So for example, let's say a major point of liquidity has already been taken, such as London lows, or a major point of sell side. However, you know, looking at other time frames, that the draw for price is still lower anyway. So you know that the draw for price is still lower anyway. That's where you can use a clean I for value gap model for a continuation from, let's say, sell side was swept, price then presents a bullish model, but you know the draw is still lower, possibly on the 1 to 4 hour time frame. We've just filled a unfilled 4-hour bearish gap. We have a 1 minute bullish uni, for example, which you know is going to get ran through, because the higher time frame is indicating that we're going to see lower price at 10 a.m. for example, inverse the 4-hour bullish, and we have the 4-hour bearish unfilled, which has just been tapped into. So you know that the overall draw for price is lower, and then that lower time frame bullish model, you can fade out and look for an inverse of the 1 minute bullish. Once price closes below, that's your I for value gap play, and you can target the next draw for sell side. So for example, the 2022 model only works when the overall bias and the overall draw for price is in your favor. So if you have a bullish bias and then the 2022 model occurs after you've seen a clean sweep of buy side or sell side liquidity, and for example you're in a premium or a discount, that higher time frame imbalance has just been filled, then the 2022 model is something that you would look to take. And then in other scenarios, you want to capitalize on a continuation with the I for value gap model. And these three models is basically all you need in order to be profitable trading ICT concepts. And to be honest, you could just trade the 2022 and that's it. You don't even have to trade the I for value gap, continuation model, or anything else, to be honest. There is other models, by the way, guys. I don't personally trade anything outside of these models. This is why I trade on a day-to-day basis, and that's pretty much it. There's no need to overcomplicate it, guys. So now let's dive into the next slide. I am going to break down all of these models inside of this video. I need to get a sip of the coffee. It's literally like 8 a.m. right now, so I just woken up. I'm trying to get my sleep schedule back in the game, you know, because I just flew from Thailand and now we're back in Miami. And thank God I'm back in Miami. Honestly, Thailand was not for me personally, and I much prefer being in Miami. The way people get stuff done over in Western countries, especially Miami, for example, it gets done very, very quick. I make one call and whatever it is, that's going to get done within the matter of a couple hours. In Thailand, it's a couple weeks, and it probably will never even get done because there's not connections like that out there. You know, for networking and stuff, Thailand is definitely not the best place for that. Every person that I met over in Thailand seemed to want to take something from me. And when you get to a point of success in your life, you're going to find that majority of the time, the higher you get up as a successful man or woman, you're going to find that more and more people are going to try to take from you. And it's very rare that you find people above you doing better on another level. And when you do find people doing better on another level, you really want to keep them by your side, because that's what's going to help you get to the next level yourself. And for me personally, I like to use the 30, 30, 30% rule. So 30% of your friends are below you and you help them to get to your level, and then 30% of your friends are on your level, and then 30% of your friends are above you. So they're doing better, they're doing things that you can't imagine even seeing yourself do in the future, that type of level. So your group of friends is you're helping a group of friends come to your level. You have a group of friends which is already on your level, and you have a group of friends which is above the level that you're currently at, and they're going to help you get to the next level. And the people who are on your level, we're trying to get to that level, and then people below you, they're trying to get to the level you're at now. And it's all, you all work together and everyone's growing together. That's the best thing, because if you find that all of your friends are below and you don't really have any connections for people who are possibly going to bring you to that next level, then you're going to find it a little bit difficult to excel, to grow in that environment. But guys, I'm not saying just because someone's not making as much money as you to cut them off. That's not what I'm saying here. I'm just saying it's very important to make the right connections with different types of people. And for example, there's going to be people watching this video who completely relate to this scenario, and they find that the friends they're chilling around with, they're smoking weed, they're doing drugs, they're fucking around, they're not really having any ambitions with life, and they can see right through it and see the end goal, the end path where these people are going to lead to, which is blatantly obvious with the actions they're taking. So yeah, that's my 2 cents about that. But yeah, very happy to be back in Miami, and we are in the month of March, and April is coming up shortly as well. The 2 cleanest months of the year for price action. So we're going to make a disgusting amount of money. So I look forward to that as well. So now let's dive into the next slide. Okay, so applying the model. So once you've found the model that works for you, whether it's a combination of the 3 models that I've just shown you guys, you want to actually backtest and forward test using 3 months of data. So once you've backtested and forward tested for 3 months, preferably forward testing for 3 months, because you could backtest for 3 months, but once you've done enough backtesting, you've kind of gone over all of the charts anyway. So I recommend 3 months of forward testing, and you want to see on a demo account, yes, demo, you don't have to go on live or anything like that. You start on forward testing 3 months and you use that 3 months. Are you profitable? Did you come out of month 1 as profitable? Month 2, profitable? Month 3. Possibly one of the months might be a losing month, because that does happen. But overall, after the end of the 3 months, are you profitable? If you are, and you come out of the end of that 3rd month as profitable, then by all means, you can either start a live account with Tradeovate, or for example, you can go to prop firms such as TopStep and FTMO and start building your capital from there and capitalizing on it. And you know, when I first started ICT, I was very hesitant of doing this 3 months to gauge whether I was actually profitable or not, because I was seeing these moves happen every single day, and I thought, if I'm doing this for 3 months on a demo account, imagine how much money I could have made. But guys, trust me, you're not missing out on any opportunities trading on a demo at the start. You're simply building a foundation and proving to yourself that you are profitable, and then your future self in 3 months' time, once you've gone through this and proved to yourself you're profitable, then from there, all you're going to do is make money. All you're going to do is build your capital. All you're going to do is get payouts. So it's very important to do this at the start of your ICT trading career, or trading any concepts in general. You could be trading other things outside of ICT. This in itself, proving you're profitable, is very, very important. And don't just forward test, obviously back test as well. Even to the point and the level that I'm at now in my trading career, I still back test every single weekend. So each trade that I've taken through the week on Monday to Friday, when it comes over to Sunday, I actually live back test with the group and we go over the trades that we took that week. And sometimes we go back to say 2015 on a random day, a random Tuesday, and we backtest that AM session to test our knowledge and freshen us up ready for the week ahead. Very important to do that. And this is one thing that I've added to this slide, is that so many traders, they pay way too much attention to win rate. They say, bro, what's your win rate? And some people's win rate is going to be 85%, but the guy who has a win rate of 45% actually has a way higher profitability. He makes way more money. He makes way greater returns by the end of the year, percentage-wise, than the guy with 85% win rate. And guys, 85% is actually really unrealistic and it's unheard of. So don't believe anyone who says an 85% win rate. My win rate personally sits around 60 to 67%, and some months it's going to be in the high 70s or low 80s. It honestly depends on the month. And the months such as March, April, and these type of months, the win rate will sit a little higher than other months such as, say, July or the summer months. But yeah, win rate doesn't matter. I always ask people the question, how much money have you actually made? Because your win rate could be 70%, but if you're only getting one-to-ones or less than a one-to-one R multiple, then of course your win rate is going to be high, because you're only going for one-to-ones or even less than one-to-one. So it's very important to understand how much money have you actually made and what is the overall percentage gain related to your account size. Okay, so I thought I'd include another slide before we actually dive into this backtesting session, and I'm just discussing macro times, giving you guys a little bit of extra knowledge on the 3 to 4 specific macro times that I personally trade. So the first day of macro is the first macro that I specifically trade. Is actually the most high probability macro, which is the 9:45 a.m. to 10:15 a.m. macro. The reason why I mark it as the most high probability macro is because around this time, this macro provides the highest amount of volatility. I don't care what anyone says. This is the most volatile point of the New York session every single time, majority of the time anyway. So this is the macro that I specifically like to trade myself, and setups occur inside this macro which are a lot easier to predict than other macros because you have the New York Open, and you can look for models such as a Judas swing combined with a model that you trade, such as the continuation, IFA value gap, or the 2022 model, to find a high probability trade setup inside that first AM macro. Another high probability macro, if the first AM's not very good, is the second AM macro, and it's at 10:45 a.m. to 11:15. And then let's say, for example, you've had red folder news on that day and the 2 AM sessions were absolutely shit and the price action was basically sideways, or there was a few opportunities but you didn't really feel comfortable taking it. Then, for example, you can go over to the PM session or even the lunch macro, and I myself, ICT says don't trade the lunch macro. I personally, if there is a clean opportunity, I'm going to capitalize. For example, if you did not take a trade in the AM, but price moved a lot, then you can expect the second AM to be a little slow, more of a consolidation. Inside the lunch macro at 11:45 to 12:15, you can expect a run on stops back to a fib retracement of 50-62% of that move that happened in the first AM, or you can see a full run on stops back to the New York Open and the previous high or low. And that's a move that you can capitalize off inside the lunch macro. The PM session, you want to look for clean sets, for example, lunch highs and lunch lows between 12 and 1 PM, which is the lunch session. And you want to look for specific highs and lows in that period. And then you have the last hour macro, which is at 3 to 4 PM at the end of the New York session. I get this question all of the time. I've answered it many, many times as well. There is a good setup, but is outside of macro even by 5 minutes. Shall I take it? And the answer is no, you can. I've seen many other traders take it and obviously be profitable as well. I don't personally take a trade outside of macro. There's so many opportunities inside of macro, so it just makes sense to capitalize inside than outside. So I always stick to my set of rules where I don't trade outside of macro, and there's so many macros that you can pick to trade. I personally only pick 4 of these macros, and specifically 3: the first AM macro, the second AM, and the PM. And sometimes you will see me take a look at the lunch macro, but it's kind of rare, to be honest. I don't really trade the lunch that often. This coffee is fucking amazing. Anyway, back to the video. Okay, so what we're going to do now is get into a backtesting session of examples of the 2022 model, the continuation model, and the IFA value gap model. So let's get straight into it, guys. All right, guys, so in this first breakdown, I am presenting a continuation paired with the 2022 model. So it's a very clean 2022 model, which all the 2022 model is basically the unicorn model, which is a fair value gap paired with the breaker after a sweep of liquidity. And for example here, we have a 2022 model, which is a continuation because we know that price is still bearish and the draw is lower. Even though we've taken sell side, I'm still bearish on price action here. So I want to see a clean continuation model for shorts. So taking a look at the 4-hour time frame, it's very obvious we're coming out of this daily and 4-hour bearish gap. So price has come back up into this daily bearish gap. We've taken out some major points of buy side liquidity inside of the AM session, taken out all of these previous highs and tapped into the daily bearish gap. So overall, I'm actually bearish for price inside of this PM session. So the PM session is at 1:45 to 2:15 PM, and we're going to mark out on the 15-minute time frame any major and clean draws for price. So the first draw for price inside this PM session is going to be this point of sell side at 0.3275, and the second draw would be this point of sell side at 9.6825. I'm also going to mark out the previous high which was created inside of the AM session, because this is going to also be a point of buy side that we could look to monitor if price comes back to this point of buy side, taps the daily bearish, which is is very unlikely to happen because it's over 300 handles away. So I want to find a continuation model to target this point of sell side for price inside of the PM session. And obviously taking a look exactly at ES as well, you want to mark out the same liquidity levels that you've marked out on NQ, looking for differences between the two pairs such as SMTs, which can work in your favor and a confluence for the trade that you take. So if you have a bearish SMT on NQ and you're looking for shorts, then that's going to work in your favor when you do take shorts. So that's the differences that we look between NQ and ES. Obviously, we want to make sure if there is a clean opportunity on NQ, you want to make sure that the clean opportunity is presented on ES as well. So both the pairs, they're correlated together and the price action's clean, and then you can look to take the trade. And if there's an SMT, that's a major confluence for taking that trade. So let's drop down to the lower time frame, monitoring this macro. And as you can see here, we have this minor buy side liquidity. So for a continuation model, you simply don't even look for price to retrace back to a premium. You know that the draw's lower. You use the first presented point of minor buy side liquidity with a imbalance resting above, and then you look for price to continue, respect that bearish PD array, and then continue towards the next draw of sell side liquidity. So we have this minor point of buy side. Let's drop down to the lower time frame on ES. So a reference point for ES that you can look to monitor is once ES takes this low, you're actually going to use that as your final TP on NQ. So ES takes that point of sell side, that is your final TP regardless, even if NQ's only moved 30 handles and ES has moved a lot, this is your final TP on NQ or ES. That's where you remove your final position. And taking a look on the 5-minute time frame, we want to make sure that this 5-minute bearish gap resting above this minor buy side gets respected. I want to see price return back and fill this 5-minute, take out this minor buy side, and then you guys will see if we get any clean opportunities. Okay, so let's see whether we get any clean opportunities inside of this PM session. So I've just marked out the macro for the PM. We look for our entries between this window, which is 30-minute window, 145 to 215. So let's take a look at price. Okay, so stating the obvious, as of now, both NQ and ES is extremely correlated. We've both just taken out the minor buy side liquidity and we've taken out this short-term highs. So price actually engineered a pair of equal highs on the 1-minute time frame. If you guys can see here, equal highs were generated. It took it out for price. We've just tapped the 5-minute bearish gap. So as of now, prior to the macro, I want to see a displacement lower below this previous short-term low, and also this 1-minute bullish gap. I want to see this get inversed along with the displacement. So we're have an I for value gap along with the displacement, and a displacement below this order block would then turn into a bearish breaker, which paired with a fair value gap would be the 2022, or you can call it the unicorn model, and then we can use that target that point of sell side liquidity. So let's see whether we get a clean displacement lower. Okay, so as you can see here, price has displaced lower, confirmed the I for value gap, which is paired with the bearish breaker, and now let's see whether we get the first point of entry, which would be this bearish fair value gap, and we want to get an entry inside of macro. Okay, so this 1-minute bearish gap is something that we're going to look to enter short of. It's paired with the wick. So the wick of this bearish breaker is paired inside of this bearish gap, which makes this a high probability fair value gap for an entry. Also, taking a look at ES, it's extremely correlated. That bearish breaker is cleanly paired with this bearish gap on ES as well. So this is a clean example of a continuation model for that point of sell side. So now let's see if we get an entry at 145 inside of macro of this bearish gap. Okay, perfect. So as we've entered inside of macro at 1:45 p.m, it's literally tapped the 1-minute bearish gap. Let me remove that line quickly. It makes it a little bit cleaner. But you guys can see price came up to that bearish gap. That's the first point of entry. I would simply run a 25 handle stop, which is above the bearish breaker. And I don't personally run a stop greater than 25 handles. Sometimes I'd run a 30 handle stop just to make sure if it's not really in a valid situation, a valid point, I'd run it at 30 handles. But for this example, it's above the 1-minute bearish and above the bearish breaker, above the I for value gap. So every bearish confluence here, our stop is above. And then our first TP is actually going to be at this minor sell side liquidity. So at 156.50, this is going to be our first TP, and we'll take 50% of our position off at this level. And then second TP, we're not going to run a second TP in this scenario. And final TP is going to be at this point of sell side. So guys, personally, I actually run my final TP. I don't see many other people doing this, but I myself, I've taken trades in the past. They've ran very, very, very close to my final TP at sell side. However, it's created equal lows and it's not filled me, and it's come back to say a 50% of the range, and I've missed out on thousands. So what I actually do, for the sake of a couple handles, I actually run my final TP just above the point of sell side. So for example, I would run my final TP at 0.3550, just resting above that point of sell side. In case price creates equal lows, I'm still going to get filled on final TP. For the sake of a couple handles, I couldn't really care less. Okay, so let's see how this trade plays out. Once price takes our first TP, then obviously we're going to trail our stops to break even. And also vice versa, make sure you're always monitoring ES, because ES is going to be reference points for first TP and final. Okay, there you have it. So our first TP has just been smashed. You'd move your stops to break even, close 50% of the position at this point, and let's see how the rest of the trade plays out. So at this point, I would actually trail my stops above this 1 minute bearish. So I'd trail my stops above this 1 minute bearish. I'd trail it at 17725. So it's above this bearish gap, and this bearish gap should get respected for price, and it should continue lower from this point. So for a market maker sell model, every bearish confluence should get respected all the way to that point of sell side, which is the draw for price. Once that draw of sell side's been met, then you can expect a change in delivery for price, which would be a run on stops of this move that we've seen in the PM. And as you guys know, once we've gone to a discount for price and we're close or have taken our second TP, I trail my stops 2 short-term highs behind. As of now, we do not have 2 short-term highs. We only have 1. So trailing it here is not valid. I'm going to leave my stops at this point. Once we get this second short-term high and we take this short-term low, I'll trail my stops to 146. But as of now, I'm not trailing it just yet. Okay, as you can see, price is now taking out that short-term low. We're going to trail our stops to the previous short-term high. So 2 short-term highs behind, 1, 2. That's where our stop is going to get trailed to. Okay, so yet again, we have 1, 2, 3 short-term highs. To be safe, I'm going to trail my stops to 13400. We should not come back to this area. If we do, then I'll comfortably get taken out of my trade if it came back to 13400. And there you have it, guys. So literally smack bang at the end of the macro, literally to the tick, it's gone straight to our final TP. And that's 168 handles inside of the PM session, which is pretty insane, to be honest. For the PM session, very, very clean example of a continuation model. This is a bearish unicorn setup, which is the 2022. Very similar. 2022 and the unicorn is the same thing. That's basically what the 2022 is. Hopefully you found this breakdown and example useful. So now I'm going to show you guys a clean example of a I for value gap model, which you can look to take inside of the AM session. So guys, let's get straight into it. All right guys, let's get into this breakdown. So I've found you guys a clean I for value gap model that we can simply backtest. And I'm not claiming these backtesting sessions as live. This is on a demo account. In fact, I'm not even taking this trade. This is simply to explain to you guys what a clean setup looks like. I'm showing you guys the models that we trade, the 2022 model, which is the unicorn model, I for value gap model, and the continuation. And majority of the time for a continuation model to take it's usually an I for value gap trade. Usually, most of the time, it will be a simple bullish gap will get inverse and the overall draw is lower. We'll take the inverse and target the next draw, obviously with other confluences in place. Simply, you're not just going to take an I for value gap and just target the next draw, because that's not going to work the majority of the time. You need other confluences in place in order for it to be valid. So taking a look inside of the second day of macro, this is on the same day that we broke down for the PM session. I just simply went back to the AM. I found a clean opportunity. Obviously, this is hindsight. However, we take this on a day-to-day basis, and that trade I did just show you guys inside that PM session, we took that live and secured 170 handles. This AM session trade, I don't believe that we took it. Possibly, maybe we did. I haven't actually taken a look back in the group to see if we did, but I can confirm the PM session trade I just shown you guys, we 100% took that live. And let me backtest and show you guys this clean I for value gap trade as of now. So going into the second day macro, I've marked out this minor buy side liquidity, this point of buy side, which has a pair of relative equal highs, and also for ES, I've marked out the same liquidity levels. The drawn liquidity for this AM session is going to be lower. If you take a look at the 4-hour time frame, you can clearly see that we've retraced back into these 4-hour bearish gaps and also filled this imbalance for price here as well. And then taking a look at the daily, we've just tapped into and above on the daily bearish gap and filled more of that daily bearish gap there as well. So dropping down to the lower time frame, let's monitor price inside of this second day macro, see whether we get any clean opportunities, and we will go from there. So the macro is between this window here, it's a 30-minute window, 10:45, 11:15. As you can see here, the first day of macro actually offered no opportunities between 9:45 and 10:15. You can see price took out that high and there was no valid opportunity for shorts here, even though we are looking for shorts. Price came up, did not take out that point of buy side, and neither did it on ES as well. And then you can see yet again there's still no opportunities for shorts at all. So obviously waiting for the second day of macro to see whether there is any clean opportunities for us to engage with. Okay, so for example, a clean eye for value gap short, preferably you want to see an inverse of one of these bullish gaps, a clean displacement lower, which is paired with the bearish breaker or mitigation block on NQ. Okay, so we have now inversed. Okay, so now we've actually taken out this point of minor buy side liquidity, took out the short-term high here and here. So we've taken out two liquidity levels on NQ and vice versa for ES. ES has now just taken out that minor buy side also. So for an eye for value gap play, we want to see this lower resting fruit. We call it the lower resting fruit is because if this gets respected but inverses this one, then it's still bullish. Price will likely continue higher. So we want to see this 1 minute bullish get inversed along with a displacement lower below this short-term low. As soon as price closes below this 1 minute bullish gap and it closes below around this area, we're set a 25 handle stop, target the next draw for liquidity, and it's as simple as that. So let's see whether we get a inverse of that 1 minute bullish. All right, perfect. So this candle has come down. It has not taken out the short-term low, which is good to see. It got taken out on ES, but still the draw is lower, pushing out of the 4-hour and the daily bearish gap. Price took out the short-term high and now inversed the 1 minute bullish gap. And a question that a few of you may be wondering, do I wait for price to retrace back for an entry off the eye for value gap? And the answer to that is no. As soon as price closes this 1 minute candle, I enter short straight away. So I enter short straight off the inverse. As soon as it's inversed, I enter short straight away. 25 handle stop. First DP, you can actually run at this low, but to be honest, there's no point actually running a first DP at this low. I'm simply going to run one TP and it's going to be at this low at 406.50. As you guys already know, I explained in the first breakdown on that 2022 continuation model, I'm simply going to run my final TP. My final TP is going to be a few handles above where final TP is actually going to be at because of, as I mentioned earlier, equal lows getting created and not getting filled. I just like to get my final TP hit, and for the sake of a couple handles, if it's not going to hit it, then I'd much rather run it just above and ensure that it gets hit. So that would be a 1 to 4 risk to reward on this trade. 25 handle stop, aiming for 100 handles. Quick 1 to 4. And vice versa on ES, you can see ES has also inversed that 1 minute bullish gap as well. So it's correlated between NQ and ES, and the market structure shift that you look for in price is below this short-term low. So price has cleanly shifted market structure as bearish and inverse bullish PD arrays. Now we expect price to draw to the opposing liquidity, and this is the trade that I would look to take. Price on the next 1 minute candle has come back up and completely filled the 1 minute eye for value gap, and then it's pushing off that, and we should start to see an acceleration lower here. Okay, so as of now, we've actually inversed all of the bullish gaps to the left, and price should not return back to our entry. Now all of these bullish gaps have been inversed. They should act as basically resistance for price to tap off and head towards our final TP. Therefore, I'm going to trail my stops to break even. Once we create another short-term high around this area, then I'll start to trail my stops to 482 at this short-term high once we create another short-term high around this area here. So once price actually takes out this short-term low here, then I'll start to trail my stops to this set of relative equal highs. Okay, so now price has taken out this high, then I'm going to trail my stops to the previous high, which is at 487. So now my stops are at 487, which is in a small profit. And then once we initially take this low, I'm going to start trailing my stops aggressively just above this 1 minute bearish. Or if we create a 1 minute bearish here, I'll start to trail my stops to 462 as I expect acceleration towards that point of sell side. And also vice versa for ES, as I mentioned earlier, if ES was to take this point of sell side before NQ, then you'd use that as your final TP and actually close out, because that would give a bullish SMT for NQ. So once ES takes the final objective, you have to ensure that you're out of the trade. And there you have it. So this 1 minute candle opened and took out this point of sell side, which you would have then moved your stops aggressively above this 1 minute bullish, and then price actually took out sell side at this point as well. So that's a quick 1 to 4, 100 handles secured. And obviously this is hindsight, but I'm showing you guys a clean example of a eye for value gap trade that you can look to take inside of any macro. It doesn't just work in the AM session. Any macro you can trade Asia. I don't recommend you trade Asia, guys. It's extremely low volatility and probability as well. Stick to the New York AM session. Tends to be the best session to trade, also the PM on certain days of the week which have red folder news, and that's all you have to know. The London session can offer around this time of year, around March, April and May. The London session actually is very high volatility and you can catch some huge moves inside of London. So do not sleep on the London session. I'm telling you guys, you'll see 100 handle moves consistently over the next couple months. So yeah, 2 clean examples broken down inside of this video. Guys, if you found this video useful, it actually sends this video out to way more people who get to see this for the first time, then drop a like on this video. Let's run up 1,000 likes. And also I take it into account every time. I write it down on my phone in the notes ready for the next video, what you guys comment below. So comment what you want to see in the next video, any breakdowns, any preferences of what you want to see, or maybe you don't really understand certain things to do with ICT. If that's the case, feel free to comment below and I'll make sure to include it inside of the next video. And until our live backtesting session, which is in a couple hours with the group, I'll catch you guys shortly. Take care.